Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my good friend, Gary Wagner, the editor of goldforecast.com. Gary, welcome back, sir.
Thank you for having me, and it's great to be here.
Yeah, it's the month of October and crazy stuff is going down around the world, Gary. You see all the global instability and what's happening with the debt bubble they just keep printing money. What do you see happening, Gary, with silver and gold, and how does it all connect?
Well, first, I want to send out my hearts and prayers to those affected in Israel, the Palestinians that are not part of Hamas. It's just a nightmare scenario there. Then we've still got a war over a democratic country being invaded by Russia. So geopolitically speaking, I don't remember a time when there's been this much tension.
Right.
And to boot, we've got our national debt that continues to grow. As you said, we're printing up money. The scenario in terms of the geopolitical concerns are something that obviously I'm very, very concerned about. How it will affect the precious metals, well, I think we all know that. They're probably going to run up and run up dramatically. I actually, in this instance, hope that they won't, because that will mean that some of this tension has been resolved. But I
Right.
fear that won't be the case very quickly.
Yeah, and we're seeing like with everything happening in the stock market and the real estate bubble, a lot of people online are talking about, what if this this 32 or 33 trillion dollars, this debt bubble and the debt servicing levels it just costs more than even military expenditure that sometimes. And in the next 5, 10 years, that it's just going to be too much. And what gives first? Is it a real estate first? Do you see some type of commercial collapse in real estate?
I see issues in real estate before I see the bubble coming about our debt.
Right.
When that debt bubble hits, I have no comment on it. It could be very dire in the United States, and then of course globally. No question about it. In terms of real estate, it's really a matter that the Federal Reserve, because they pretty much set rates worldwide,
Hmm.
have to acknowledge that the 5% and 6% and 7% mortgages are unbearable to people that have gotten used to, 2, 3, 4% rates. The people that have debt have seen that grow and the rates and their cost of borrowing grow. Um, it's a difficult time at best,
Hmm.
but I believe in terms of gold and silver, we saw gold actually touch $2 shy of $1,900 today. Then, of course, the CPI report came out and inflation is still running hot. Now,
Hmm.
granted, it's not the 9% we had in March of 2022, but it's still exceedingly high. And the Fed, I believe, is making a mistake by not having interest rate cuts now and now saying that they probably won't cut them till the end of next year. And now with the CPI coming in just a little bit over the forecast, they're saying there's a decent probability that the Fed will again raise rates in December.
Wow.
And I don't think that's the right move, but I'm not an economist. I'm not in power to make those decisions, and I'm just another human being watching this all happen. And I wish it was different. That's the best I can say.
Yeah. And where do you see gold going and silver going with all this global turmoil? Like, do you have any price targets? I know you sent me a few charts, which I'm gonna share with everyone right now. This first
Yeah,
one is silver futures, I think.
right. I mean, of course, today we saw a pretty strong sell off because of the CPI.
Right.
But I think we've got a base formed at the recent lows that we hit. We've seen it rally and gold rally acting as a safe haven once again. We haven't seen that in a while. I wouldn't be surprised if things get worse before they get better, which I hope they don't. But
Hmm.
if they do, Gold will easily break above 1900, go to maybe 1950. If they get absolutely untenable, we'll see it go much higher. And I think that silver will rise back above $25 an ounce.
Yeah, and there's a lot of talk lately, Gary, about even on social media about CBDCs and the central bank digital currency. What's the end play or the end game for the US dollar? Like, can they continue to keep on printing, or do the bankers really ultimately know that they have to switch to a digital, completely new currency, and will people accept it? How do you protect yourself?
Well, I think that I mean, I believe it's already digital. I
Yeah,
don't
yeah,
carry much cash in my wallet, but I don't see a difference between digital and printed currency. I believe that both are fiat and both are backed by an enormous amount of debt rather than being backed by the faith in our government, where here in the United States we've got, over $33 trillion of debt.
wow,
And so whether it's digital debt or currency debt and paper money, I don't see a difference. It's There's going to have to be a dramatic shift in thinking in terms of what Washington does in their budget. You and I, the people that listen to us, we could not afford to spend what we don't have the way the government is.
right.
And that's not sustainable. Everyone acknowledges that. So it's not so much, if it's, to me, whether it's digital or how long they remain printing paper money. Eventually it will move to digital, but something's got to change on the policymaking in Washington that doesn't allow this kind of debt to accumulate, and has some concrete plan to somewhere down the line balance the budget.
Yeah, I think Warren Buffett, I seen him a video of him last week. He said he knows how to solve the debt problem and the Congress problem in 5 minutes. He said he would just put a rule that anytime the deficit or anything went past 3% GDP, that he would anyone in Congress, you would have you would be immediately fired, or basically your term would be over. And yeah.
Yeah, I think if they if they threaten a government shutdown, let them not get paid, because they still get paid with or
Yeah, yeah,
without a government shutdown. Let them be the blunt of the hammer, so to speak.
yeah.
But yeah, absolutely. The fact is that our debt is accumulating faster than our GDP is growing, and that is not sustainable. That's got to change. And I've been an advocate for a while. At first, the idea of the 2% target started in 2012. Well, we just came out of one of the hardest global times in history, with the beginning of a pandemic and then a worldwide global recession. And the fact of the matter is, they should have continued to keep borrowing costs down so that people could recuperate, and grow, so that the GDP could grow. And the thinking has got to change in Washington. It's got to change by the Federal Reserve. If not, there's going to be a lot more pain before we have solutions.
Do you think they'll ever change though? Or they just been doing the same thing, printing money and and causing all, doing this for past 30, 40, 50 years or even longer?
Well, it's an experiment. This is a recent way of running a country's economy, this Keynesian economy, which is to print money to increase GDP, to get things rolling again, to grease the wheels.
Right.
And it hasn't been in effect for a century. It hasn't been in effect for more than 60 years or so. Well, actually, probably more than that. But it's a short-term experiment in my eyes. So who can say what the end game's going to be if they don't get their act together?
Yeah, and you sent me a few other charts. I think this next one is I don't know if this one is the silver futures chart or
Ah, yeah, what that is I sent you a couple of silver charts,
right.
and this is called a Henkinashi. The first one that we looked at is a standard Japanese candlestick chart.
Okay.
And the difference between that and what people are looking at now is how they fix the open. In a Henkinashi chart, the open is fixed by using the midpoint of the prior session. These are daily charts, so the prior day. And what I'm trying to illustrate by having your viewers look at this is even with today's down cycle in silver, the trend, the upside trend is still got steam energy and is fully intact. This is a way to look at market data where it smooths out the day-to-day noise by fixing the open as the midpoint of the prior day. And when you look at this, silver looks a lot more bullish than the first chart we put up.
Right. And now where do you see, like, I know we were talking a lot about price targets and the global instability, but do you really think it's a, like, I know in the beginning of the interview you were saying it's a mistake for the Fed to keep on raising rates and something would give out first. But what happens if like a big major bank does collapse in the United States? Would that cause gold and silver to start would go up in price? What do you see there?
Of course it would.
Yeah.
Of course it would. My question is, how would the Federal Reserve respond?
Mm,
What tools do they have where they can shore up the banks? And it's not by making the Fed funds rate higher. It's not the right move.
yeah.
It's counterintuitive because of the extreme pain globally that existed from 2020, just up until recently when things began to normalize. And as soon as they did, they put the hammer down.
Mm,
And historically speaking, I've lived through interest rates being double digit. I remember them well. I remember gas being a lot more expensive. I remember a point when inflation was double digit.
yeah.
And we're not facing that right now, but what we are facing is a complex set of issues. And to me, it's not what the Fed is doing. I believe that they can adapt and change. I don't think they will. I think the biggest issue facing America and by virtue the global economy, because what happens here affects everyone,
Hmm.
is the national debt. I think that that is so worrisome that I think that that will, if not dealt with, and I don't see an end game solution,
Right.
take gold well past 2002, an all-time record high that's far beyond any number I want to throw out at you over the next 3 and 4 years. It can't do anything but go up if our debt isn't dealt with.
Hmm.
And that's the biggest issue we face long term. The geopolitical stuff, that's got to run its course and be resolved with some sort of peaceful transition. I don't know the end game to that either. And that's why, whereas I typically come on here and I'm confident about my beliefs, which I am, but I'm not confident about what I'm seeing in terms of the financial environment
Hmm.
and the geopolitical environment. To me, it's something that's there's a foreboding need to fix this, to bring peace somehow, and to live within our means. And I don't see that happening with our government till something catastrophic happens. And bank failures could be the first domino that falls, so to speak.
Yeah, absolutely agree with you. I want to thank you, Gary, so much. Every time you come down, it's so knowledgeable having you come down and speak about silver, gold, and the global economy. And I really hope that within the next month or two, as we see what the Fed does, as always, as we're watching, I hope you come back and explain it all to our viewers.
Absolutely.
And
Absolutely. And I
where,
think both gold and silver will move higher this year, much higher.
yeah, I agree. Where can people find you and where can people contact you, Gary?
Well, thanks for asking. thegoldforecast.com, one word. That's our website. We have a YouTube channel, and my Twitter handle is Gary S. Wagner. So at Gary S. Wagner.
Perfect. Okay. Talk to you soon, Gary.
Have a great day. Thank you.